Alright, good evening and welcome back everyone. This is Sourabh Mutha and we're looking at the tax fast track course for May and November 22. Whether you're looking at the exam for the first time or whether you're looking at it after another attempt which has not been really good, don't worry, we will make sure that this one's much better. In this session and before this session, we finished a couple of chapters and the last one that we did was ITC. And in this session, we are doing the payment chapter, the invoice chapter, the returns chapter, and let's see if we can do more exemptions also. It's good to be ambitious. I am being very ambitious here with these chapters going to be done in this session. We are starting off with payment chapter, guys. Payment chapter is almost done because we've done the main thing of payments. The remaining is going to be done right now. The invoice chapter is all about what kind of invoices, etc., debit notes, credit notes, e-way bills, etc. And returns chapter is what about returns that you file and exemptions, whatever we can do. So what we will do now is we will look at a chapter called payment and then we'll squeeze an exemption in the middle. But as always, I'm going to upload my QuickBook here. Here it is. This is the QuickBook that I'm going to upload. 1 second. Here we go. In this QuickBook, we are already done with a couple of chapters. Very glad that we are done with those chapters. Now it's time to look at the payment chapter. Here we go. Guys, before we start reading from the QuickBook, let me give you an idea. This is electric bike company. And whenever you decide to register, whether it is compulsory registration or voluntary registration, or you are liable to register and that's why you are registering, whatever is your idea of registration, but the moment you register, 3 electronic ledgers open up on your portal. There are 3 ledgers which open up. We're talking about those ledgers. 1 second. So there is the electronic credit ledger, which is almost like your Paytm money. Whatever ITC you can get, and you know, whenever you purchase something, on purchases you get credit. So whenever you purchase something, you get credit, which will appear here. Once it appears here, you can use it whenever you want, but to take it here, there is a certain due date by when you should take the credit here. This credit can be used like a Paytm money. It can be used, but it can be used only to pay your taxes, nothing else. You cannot pay your interest, penalty, fees, etc. Only your taxes can be paid, and that too not only FCM taxes. So this one has very limited use. It is great, Paytm is great, but it's only for FCM taxes. Then there is an electronic liability ledger. This electronic liability ledger, whenever you make any supplies, the supplies will give you a liability, and this is the liability. It can be IGST liability, SGST liability, CGST liability, and this is the liability like your electricity bill that has to be paid. Your liability can be of tax, but it can be of TIFPO also, tax, interest, fees, penalty and others. It could be anything that you need to pay. Guys, this TIFPO has to be paid first of the prior periods. So if you're filing the return or if you're trying to pay for February, you have to make sure that Jan and December and November is paid. Otherwise, that has to be paid first, prior period. Then the current period has to be paid off. And then if the officer has passed an order and said that, listen, you need to pay something, the officer also can do that. We will see it at CA final level. Then that has to be paid off. So this is the sequence of paying off your liability. And guys, you can obviously pay your liability through credit, but only the cash tax, only tax can be paid, and that too FCM tax. So how do you pay the balance, that is RCM tax? How do you pay interest, fees, penalty, others? You have an electronic cash ledger, and that cash ledger is like your bank account. But guys, cash is always and always supposed to be very well used. So hence, whatever is a credit, you will use the credit first. and whatever balance you need to pay, you will pay through the cash ledger. So this is your cash ledger. It's almost like your bank account. Can you put money in your bank account? Yes. Can you use that money also? Yes. This cash ledger can be, it's your money. You can pay using TIFPO. You can pay tax, interest, fees, penalty, anything you can pay. Yes. There is no restriction in this case. But how do you put money into the cash ledger? It's almost like putting money in your bank account. You can pay through cash, check, debit card, credit card, net banking. You have many ways to put money into this account. So TIFPO, and this is the cash ledger. These three ledgers automatically open. Yes. But if you are in composition scheme, then credit ledger does not open. Why? Because you can't take credit, and credit ledger will not open up. But anyways, these are three ledgers which open up. We'll talk about one after the other, the ledgers. The first one is the cash ledger. Once a person is registered in GST, electronic cash credit ledger open automatically. Cash can be paid into such cash ledger using net banking, debit, credit cards, as well as over the counter. What is over the counter? Guys, you pay cash, you deposit a check, or you give a DD, that is over the counter. But for that, the government has kept a limit of 10,000 per month per challan. They don't want you to pay cash, check and DD. They want you to use electronic means, and hence they have put a limit. This limit applies to you and me, but 3 people it does not apply to. If the officers have sold some assets of Vijay Mallya, Nirav Modi, etc., or some GST fraudster, and they have paying some cash, so perfectly okay. If officers have done some search investigation and they are paying, an OIDR making payment, this we will see at CA final, or any other notified person, then they can pay cash more than 10,000. Yes, they can pay over the counter more than 10,000 per month per period. Now, how do you pay this? So first you have to generate a challan. There are no manual challans in GST. There is only electronic challan. In fact, everything is electronic under GST. There is an electronic challan that you have to generate. There is only one challan, yes. And let's say you have to pay cash of IGST, tax 16,000. Then you will generate a challan. In that challan, you will write your registration number, GST number, etc. And you will write that you are paying IGST tax of 16,000. So you will generate a challan, and when you generate it, you will get a CPIN, common portal identification number. The CPIN is a 14-digit number which is valid for 15 days. So the challan is not, you've not made the payment, you only generated the challan here. That is called CPIN. It's a 14-digit PIN valid for 15 days. Now, how do you pay using the challan? So you use the challan and you pay the money to the government. And when you pay the money, it's a sin to pay tax, guys. So when you pay the money, you will get a sin number. Sin number is basically a challan identification number. CPIN is common portal identification number, and when you pay, you get a challan identification number which is called SIN, which is nothing but your 14 digits plus 3 bank digits, so 17-digit number. So remember, it's a SIN to pay. So whenever you pay, you get a challan identification number. Now, whenever you pay, obviously, whenever you do any transaction online using bank account, you get a bank reference number. So same way here also you'll get a bank reference number, which is not important. CPIN is important, SIN is important. And next, guys, you can pay using ICICI Bank Bangalore. I can pay using ICICI Bank Mumbai, and someone can pay using ICICI Bank Calcutta. But the government will not get to go to each branch. So they will say that please nominate one branch as the e-focal point branch, electronic focal point branch, and that focal point branch, all the GST money of ICICI Bank will go to that branch and will be parked there, and the government will take it from there. So e-focal point branch is EFPB, is that branch of the bank which is authorized to collect GST. And then, guys, what will happen is, in case of NEFT and RTGS transaction, the e-focal point branch is RBI. So RBI will collect, whenever you pay through NEFT or RTGS, RBI will collect the money for the government. Next, if you have any complaints, there is GST PMT 07 and 04, but this is not important. TDS and TCS reflect in the cash ledger, even this is not important. CA final level, I've just mentioned it here. Very, very important is this next section, 4910. Guys, you paid IGST tax of 10,000 rupees, or let's say 16,000 rupees, but actually you made a mistake. You had to pay IGST interest of 16,000 rupees. So you made a mistake. Can you transfer it from one account to the other? Guys, can you transfer money from your HDFC account to your ICICI account? Yes. Earlier you could not do it. Earlier you had to take a refund. Now they say that there are 4 major heads: IGST, CGST, state or union territory, and GST compensation cess. And in these 4 major heads, they have 5 minor heads called TIFPO. In IGST, tax, interest, fees, penalty, others. Same way in this also. So in each major head, there are 5 minor heads, and you can move money around no problem by filing something called GST PMT 09. You can move money around only in the cash ledger. So from 1st of April 2020, you can now move money around from one major head to another minor head, no problem. Anywhere you can move around here, because it's your money, you can transfer it, no problem. No manual challans, and cash ledger can be used to pay TIFPO. So it's your money, you can use it to pay whatever you want: tax, interest, fees, penalty, others. Next is the credit ledger. Guys, purchases gives you credit. The input tax credit is a self-assessed in the return of a registered person, shall be credited to his electronic credit ledger. What I mean by this is electric bike company, and they are saying that they have purchased some batteries, invoice number 123, and they are saying they want a credit of 16,000 rupees. Battery supply company has also uploaded a return, and they are also saying that they have an invoice called number 123, but they are saying that the GST is only 14,000 rupees. Now whom will the government trust? The government will trust you. You want the credit, whatever you are assessing will be given to you, so they will trust you. Yes, they will trust you. So you are saying 16,000, yes, you will get 16,000. Guys, as long as the invoice is uploaded, the same invoice is uploaded, yes, so you will get 16, yes. But if you are wrong, there is some interest which are heavy, so we will see that ahead, but this is what they will take. So whatever you assess, on that basis they will give you credit. However, the credit can be only used to pay tax, and that too under FCM, not even RCM. No, not even RCM. So only FCM tax, no IFPO, no IFPO. And you know how to use the credit, guys. First use IGST and then use SNC in whichever order. ITC cannot be used to pay RCM, and ITC cannot be used to pay composition scheme. Guys, credit is only and only limited to tax under FCM. If you remember that, everything else is to be paid through other things. Example, guys, your Paytm money can only be can be used to pay your electricity bill. So what about your pizza bill, mobile recharge, everything through others? So remember this, that your credit ledger can only be used to pay tax, FCM tax, that too. As if you remember rule 86A, A is for avoid. If the officer feels you've taken some credit fraudulently because either you are not present, or the recipient is not there, or the supply is not there, or the invoice is not there, or any of these sort of things, then they can restrict your usage of that credit for a maximum period of 1 year. Alright. And the input tax credit as self-assessed in the return of the registered person shall be credited to his electronic credit ledger. Whatever you self-assess, we will give it to you, no problem. But as long as, guys, invoice should be uploaded, the invoice should be uploaded. That is the credit ledger. Very, very simple. Nothing complicated in the credit ledger. Alright, moving ahead to the liability ledger, guys. The liability can be tax, interest, fees, penalty, others. It has to be discharged as under first the current period, the prior period, then the current period, and then the liability determined by the officers under 73 and 74. Guys, everything here happens online, and that facility is great. It saves a lot of benefit, saves time, effort, etc. And here again you should know that section 4910 GST PMT 09, if your liability has to be paid but you've deposited cash in a different head, you can change from one head to the other. Yes. Now guys, interest. Please tell me, if you don't pay money to a money lender or to the bank on time, do they charge you interest? Yes. Same way, if you don't pay GST to the government on time, will they charge you interest? Yes. The rate of interest is very high, 18% in GST. So let's see, this is Electric Bike Company. They have made supplies on which they are supposed to pay 50,000 GST to the government, and they have purchased on which they can take credit of 45,000. Guys, this is the situation for the month of December. But December's due date to pay was 20th January, which you missed out, and you're paying today, that is 27th February. Please tell me guys, are you late in paying the money? Yes. So will the government apply interest? Yes. At what rate? 18%. So that is sure, 18%. On what amount guys? On what amount? For the month of, I'm talking about December, this is December months. How much did you have to pay to the government? 50,000. But how much credit do you already have guys? Because you have not filed your return, that means you have not used your credit. So how much credit you have? 45. So what is the net cash amount that you have to pay? 5,000. So only on 5,000 you will have to pay. Yes guys, please remember, you've not filed your return, and that's the reason your credit is still unutilized. So hence overall you need to pay only 5,000 to the government. So 5,000 into 18%, from which day guys? 20th Jan is your due date. Till then there is no interest. After 20th, that is 31st minus 21 plus 1, 11 days of January and 27 days of February, that is 38 days. So I hope this is the calculation which you understood. Mainly 18% is simple, calculation of days is simple. Mainly you have to pay on the net amount. This is section 50, subsection 1 and section 2. But guys, I'm changing one thing here. What if Electric Bike Company, they had to pay 50,000 rupees for the month of December. They had a credit of 45,000 and they did file their return on time, on or before 20th January. They did file their return. Will there be any interest now? No. But guys, what if on today 27th Feb guys, what if today, let's say they forgot to put one supply in the month of December. They forgot one supply means they forgot liability, and let's say they now have to pay 10,000 rupees. Will there be interest on this 10,000? Yes. But can you take any credit? No, because the credit has already been used. Into 18% into how many days? Again 38 days, from 20th Jan to 27 Feb, 38 divided by 365. So if you filed your return, then you've already used your credit, then only on this amount, balance amount. And if you've not filed your return, then you can take the credit. This is section 50, subsection 1 and subsection 2. But guys, last thing in credit, Electric Bike Company, they have made supplies on which the GST payable is 5 lakh rupees. They need to pay 5 lakh to the government. This month they have not purchased much, so their credit is only 1 lakh rupees. So guys, will they have to pay 4 lakh in cash? Will they have to pay 4 lakh in cash? Yes, but they don't have 4 lakhs in cash. So as a CA, can you help them? You tell them, listen, don't show some liabilities. Don't show them your sales. Say you only have sales where GST is only 1 lakh. So guys, are you on your own Are you reducing your liability? Yes. Or you could increase this to 5 lakh. Are you artificially increasing your credit? Yes. In both these cases, guys, if there is any undue or excess reduction of liability or undue or excess claim of ITC, then that is wrong. So whatever is that amount, that is 4 lakh, on that they will charge you interest at the rate of 24%, but we will see this in CA finally. Because no one will admit I did it on their own. They will all say, no, it was a mistake, I did not see it. Guys, everyone is innocent. There is no one. If you go to jail and you ask, did you murder? They'll all say, no, I haven't. Everyone's innocent. So no one's going to admit it. So how do you catch people, etc.? We'll see at CA final. So here it's either 18% or 24%. Perfect. This is section 50, interest in the payment chapter. And guys, that is your payment chapter. And guys, one more thing, just one more thing. This is electric bike company, and they have sold you a bike for 1 lakh rupees on which GST is 18,000 rupees. This is you. Please tell me who has borne the burden of GST. The consumer has borne the burden of GST. They paid the GST ahead also to the government. Yes, they paid the GST to the government. The government got the GST. But then they realized that, listen, electric bikes are supposed to be exempt. So that means there should be no GST. So can they take a refund of this 18,000? We'll see more of this in CA final, but can they take a refund of this 18,000? Yes. But guys, if they get the refund, is it fair? Who has borne the burden of GST? The consumer. So who should get the credit? The consumer should get the credit, and hence this is called unjust enrichment. You should not enrich yourself or benefit unduly or unjustly at the cost of others. This is called unjust enrichment, which we will see more at CA final level. But please, again guys, what is it assumed? It is assumed that whenever you have sold, the incidence of tax has passed on ahead. That is the assumption, yes. So when payment of tax is made, it is assumed that the incidence of tax has been passed on ahead. Thus, no refund will be made to the middle person, that is a payer, since it will lead to unjust enrichment, section 49.9. But this concept is more for CA final. Perfect. Guys, this is the returns chapter. Sorry, this is the payment chapter. I'm just uploading the module for the payment chapter, and let's do the payment chapter also from here. 1 minute. Here we go. This is the payment chapter. Let's do sums from here. Okay, zooming in, and here we go. Everyone participate, please. Examine the authority vested under CGST Act for preventing a registered person from utilizing the ITC availed in a fraudulent manner. Guys, do the GST authorities have any power from preventing a registered person from utilizing ITC? Yes. What is the rule, if you remember the rule? The rule is 86A, avoid. If there is no supply or no invoice or no supplier or no recipient or no tax has been paid to the government, if any of these cases exist, the GST officer can intervene and can prohibit you or prevent you from utilizing your ITC for a period of maximum 1 year. However, you can make an appeal to the commissioner to release the funds before the set period of 1 year in case the reasons exist. Alright. Next, please read and please answer, guys. No, the question is split into 2 pages, so I'm just going to read it for y'all. Mr. A has deposited a sum of 30,000 under the minor head interest for major head IGST. At the time of filing the return for a particular month, he noticed that there is no sufficient amount under the minor head tax towards payment of 30,000. When approached by the jurisdictional tax officer, Mr. A was guided to deposit the tax under the proper head and claim a refund of the remittance of the amount deposited under the head interest. Guys, do we have to do that? Do we have to again pay and take a refund? No. Section 4910 and GST PMT 09. In that they say that you can move it from one place to the other. There is no problem with that. Next guys, please see the question, please read, and please let's answer this, everyone. PPC is a recipient. They have purchased something and they want to take a credit of 54,000. Just 1 second guys. Okay guys, here you want to take a credit of 54,000 during the month of February 2021. You are PPC on a particular purchase. The accounting records indicate that GST is 45,000 as per the bill received. The GST are uploaded also shows 45,000, but as you know guys, credit of ITC, input tax credit, is given as self-assessed by the registered person availing the credit, and hence what will be taken is 54,000. This can be maximum MCQ, nothing more guys. Next. Very good question. Please read first, and please, the question is, sort your confirmation for payment of such late fees through the balance available in the electronic credit ledger. Very simple. Can the electronic credit ledger be used to pay the late fees? You don't have to read the question, the entire question also. Guys, please tell me, can I use credit for late fees? No. The credit can only be used for one thing guys, tax, that to FCM. Perfect. How many types of electronic ledgers are there? Please read and please answer. 3. Credit, liability and cash. What are the main features of the GST payment process? The main features are there. All challans are electronic. There is only one challan. It focuses on net banking and electronic payments. It is fast. It is quick and fast. It is efficient, and it basically avoids any errors. Alright guys, question number 3 only says that if you have to pay any late fees, can you use the electronic credit ledger to pay such late fees? As we've already discussed guys, the electronic credit ledger, that means your credit, can only be used to pay one thing. What is that one thing? Only tax, and that to the tax under FCM, not interest, not fees, not penalty, not others. Alright. Please, question number 8, everyone, please check and tell me which is that output tax where any of the input tax credit can be availed or can be used. IGST guys, when you want to pay IGST, can you use IGST? Yes. Can you use CGST? Yes. Can you use SGST? Yes. So it can be anyone which can be used. Yes. 9th question guys. Before you read the question, before you read the entire context, please read the questions. Are manual challans allowed under GST? Please answer guys. Are manual challans allowed? No, manual challans are not allowed. What is the validity period of a challan guys? Once you generate the challan, common portal identification number is valid for how many days? 15 days. Excellent. Is cross utilization amongst major and minor heads of electronic cash ledger permitted? Yes, section 4910 and GST PMT 09 allows you to transfer. Good answering, guys. And this question here, very good question, guys. Star mark. Please try. I'm going to give everyone 3 minutes to try this question. Slightly tricky. See why you can use the credit ledger. See what you can use the credit for. Everyone, over to you all. Please try and attempt this. Guys, Suhasini is a registered software consultant. This is Suhasini. On account of ill health, she could not provide any services, so there is no supply. So is there any liability? No liability. However, she had to incur all the expenses relating to office. She paid 75,000 to various vendors. The total input tax involved as the goods and services is 13,500. So she has a credit of 13,500. Out of the total bills paid by her, one bill of 15,000 relates to security charges availed for security of office. The tax on which is payable under reverse charge, 2,700. Guys, please tell me, in reverse charge, will Suhasini have to pay this 2,700? Yes. And can this be paid in through ITC? No, ITC can only be used to pay tax, but only FCM tax. So hence, Suhasini is not right, because ITC has to be paid, cannot be used to pay RCM. This has to be paid through cash ledger. Perfect. And with that, guys, we complete another really good chapter. Excellent, good job all of us. So this is one chapter which is done and dusted. Now looking at the next chapter, which is invoice. But let's try and squeeze in a small exemption in between chapters. So let's do a small exemption in between the chapters. Agriculture or agriculture services is what we will do next. Guys, as you know, agriculture, the government likes agriculture, whether it is income tax or GST. In both cases, the government really likes agriculture. So the government has a lot of exemptions on agricultural services. Here it is. If you are going to cultivate and sell agricultural produce, it is exempt. So the first one, selling of agri produce, is exempt. Yes, but you have to cultivate it and sell it. Next, renting of land, but has to be for agri purposes. If you give it for a shooting, then that is taxable. Supplying farm labor. Let's say you supply farm labor to someone, and in that farm labor you will charge 10,000 plus GST. No, because that is exempt. Renting out agri machinery like tractors, etc., not the sale, the renting out is exempt. Next, any services like harvesting, storing. So storing, before storing you will load, for storage you will unload, so all this is also exempt. Yes. Then guys, this is the entire stage: selling agricultural produce, renting the land, farm labor, renting agri machinery, storing, loading, unloading. is warehousing, but warehousing, and these 2 points have certain good exceptions. We will see warehousing is also exempt. Fumigation in a warehouse, fumigation is where you will kill all the insecticides, etc. That is also exempt. Agriculture and soil testing services is also exempt. Anything to do with agriculture is always exempt. Next, along with agriculture, guys, the related activities like animal husbandry, dairy, all those are also exempt. Related industries, yes. In income tax, they are taxed. In income tax, a dairy is taxed, but here all these related like dairy, like horticulture, all those are also exempt. But this is only if the produce is agricultural produce. Guys, what I mean by agricultural produce is, example, tea leaves is exempt because it is agriculture, selling tea leaves, there is no GST. But when you convert it into tea powder, there is GST on that. Yes, there is GST. Why? Because you're changing the essential characteristic. So let's see which all where we change the essential characteristic. Guys, in these we are changing the essential characteristic: tea, coffee, jaggery, dehusked pulses, where you remove the skin, dehusked pulses. Then paddy being converted into rice, very very important. Then jute, all these betel leaves, all these guys are not, because their essential characteristic is being changed. Yes, so all these are taxable. Yes, but there is an exception. They are storing, loading, unloading and warehousing has been specifically made exempt. So their selling has been made taxable, but their loading, unloading, storing, warehousing has been specifically made exempt. That is very very logical. Agriculturists mostly are exempt, but tell me guys, if a farmer buys an AC, will he have to pay GST? Yes. And will he get credit for it? No, because it is exempt, so he will not get credit. Alright. There is something called agriculture extension services also, which means scientific ways to do agriculture. Even that has been made exempt. So everything guys, I'll give you a pro tip, everything around agriculture is exempt except these fancy things where you're changing the essential characteristic, that has been made taxable, except you're storing, loading, unloading and warehousing, that is still exempt. Alright guys, we'll see more on agriculture when we do the module questions, but right now it's time for the next chapter. So the next chapter is invoice. I'm just going to the next chapter. Here we go. Guys, before we do the chapter, let's try and see the details. This is electric bike company. Whenever they sell a bike to you, will they issue an invoice? Yes. As you know guys, there is a due date of issuing invoice. Please tell me, for goods, before they are removed or while they are removed or delivered, you have to issue the invoice. If you remember it from yesterday's time of supply chapter 31.1. For continuous supply of goods, as and when the statement of payment is made, by then the invoice should be issued. And on sale on approval basis, whenever the supply is approved, or maximum 6 months, you have to issue the invoice. Guys, do you recollect these due dates of issuing invoices? Yes. Next, whenever you are issuing services, example, my CA firm, whenever we provide services, we also should issue the invoice within 30 days. For bank, financial institution, NBFCs, how many days guys for banks, financial institution, NBFCs? 45 days. In case of continuous supply of services, you have to open the contract and see DPC, the due date or payment date or completion date. And in case of cessation of services, almost like a breakup, you don't want to see the other person. So on the date of cessation, before that, issue the invoice. These are again the due dates. So guys, this is something that we have already seen from time of supply chapter. Next guys, for invoice, there is no particular format that has been prescribed. There is no format. That means, do you have to put the Prime Minister's photograph on the invoice? No, nothing of that sort. They've only told you some details which you should be part of the invoice. What are the details? Obviously, just think of any invoice guys. You will have the supplier's name, the supplier's GST number, the supplier's address and contact details, the description of the product, the HSN code of the product. I'll tell you more about the HSN code. The GST rate has to be specifically mentioned, and the GST amount has to be separately mentioned. It cannot be in the same thing, it has to be separately mentioned. Sometimes they also have to mention details of the recipient. I'll tell you when they have to mention details of the recipient. They also have to describe the goods, quantity, all of that. Yes, that's about it. Yes. So these are some of the details that they have to give in the invoice. And guys, this is what needs to be put in the invoice. There is no format given. And for some people, like movie theaters, oh yes, you have to have a 16-digit serial number also. 16-digit serial number also. But for some people, like movie theaters, like banks, like passenger transport and goods transport, in these cases, whatever document you issue can be treated like an invoice. Guys, please tell me, the last time you went for a movie, did you get a ticket or did you get an invoice? Ticket. And that was considered as an invoice. The last time when you've taken a bus ticket, did you get a ticket or did you get a tax invoice? Ticket. So in these cases, whatever you issue will be considered the invoice. And for banks, even if they don't put 16-digit serial number, that's perfectly okay. This is invoice. Guys, the invoice has to be issued in triplicate. It should be in triplicate. Why triplicate? One copy you will keep. Original you will give to the customer because customer is king. Duplicate you will give to the transporter, and one you will keep. Triplicate. But if it's a service, then duplicate, because you don't need a transporter in that case. So you will issue it in duplicate. Next. There are some times when you're not making a supply. Example, you are sending the bike not for supply but to repair. You're sending the bike out for repair. So in cases you can't issue an invoice, you will issue something called a delivery challan. Now delivery challan is very similar to the invoice, but when will you use delivery challan? When you are sending it for job work. Job work means repair, painting, etc. When you are sending the goods in lots, so guys, let's say you are sending 100 batteries in lots of 10 batteries, you will not have an issue invoice for each battery, each lot. So the first lot goes with the invoice and every other lot goes with a delivery challan. When you are sending completely knocked down or semi knocked down goods, example, you have to basically, you are buying a huge crane, they can't transport the crane at one go, so they will knock it down and they will send you different parts. Those parts come through delivery challan. And same delivery challan also in triplicate or duplicate. Not duplicate actually, because service does not have, so only in triplicate. Same concept for delivery challan as well. Next, while 31, 1, 4 and 7 are covered here, 2, 5 and 6 is covered here, but there is one missing number, that is 31, 3 guys. If you see, there is no 31, 3. So 31, 3 are some special circumstances. Watch out on the screen. 31, 3A, A is for additional, that's the shortcut. Guys, if you are liable to register on 27th Feb, you apply on the 10th of March and you get a registration on 25th March. Please tell me what is the effective date. effective date is 27 Feb, absolutely right. So in this time period, do you have to shut down your business or can you make supplies? You can make supplies, but because you did not have a GST number and now you have it, you have to issue additional invoices which they call as revised invoices. This is A for additional invoices called revised invoices. In case of revised invoices, you can issue them together also at one go. If the persons are not taking credit, you can do consolidated ones or you can do one invoice also. This is revised invoice. The revised invoice has to be issued within 30 days from the day you get the registration. So from 25th March, you have 30 days to issue revised invoices. Next, 31(3)(b). If you are very busy, let's say you're a stationery shop owner and so many people come to buy one pen, one small booklet, one small thing for 10 rupees, 20 rupees. Are you guys, whenever last you bought a pen, did you get an invoice, tax invoice for that pen? No. So if you are very busy and you have lot these small items and the government says, listen, if the value is less than 200, then you don't need to issue an individual invoice. You can issue a consolidated invoice at the end of the period, that is end of the day. But what if the person who's buying is registered and he wants to take ITC, then you issue an invoice. So generally less than 200 you don't issue an invoice, but if it's registered and he wants to take ITC, obviously registered means composition scheme or regular scheme both, then you will issue an invoice, yes. 31(3)(c). In case of composition scheme, C is composition scheme, you can't charge GST to your customers, so you issue something called bill of supply. And what if you are making taxable supply and exempt supply both? Then you issue a bill of supply come invoice, invoice come bill of supply. Example, if I am selling some liquor also and if I am selling some, let's say, juice also, then I will issue an invoice come bill of supply. I don't need to issue two different documents. The same document will be called invoice come bill of supply. 31(3)(d). Guys, whenever you ask for advance payment, do you demand advance payment? Yes, D for demand. You issue something called a receipt voucher. Whenever you receive advance, receipt voucher. And whenever that advance has to be returned, it is called refund voucher. It is called refund voucher. So receipt voucher and return or refund voucher. Next is 31(3)(f) and G. Guys, in case of RCM, if you remember, when an agriculturalist sells cashews to a registered person, it is under RCM. So agriculturists will issue a bill of supply and not a tax invoice. So the registered person has to issue his own tax invoice, yes, because without that he cannot take credit. And he will also have to issue something called a payment voucher. How do I remember him? The recipient has to all do full work. He has to do F is for full work. He has to issue a tax invoice also, and he has to issue a payment voucher as well. So this, guys, are special circumstances. Let's recap. A is for additional invoices, that is revised invoices within 30 days. B is for small busy people. C is for composition scheme and taxable exempt supply together. D is for demanding advance, E for refunding advance, and F and G is when RCM people have to do the full work. They have to issue a tax invoice also and a payment voucher as well. This is section 31(3). Next, very interesting, guys. While you can collect GST, but section 32 says that you cannot collect GST if you are not authorized. Example, if you are not registered, can you collect GST, guys? No. And if its supply is exempt or non-taxable, can you collect GST? No. That means you cannot lie. You cannot collect GST under section 32. They say that if you are not authorized, you cannot collect GST. Simple. And section 33 says that the GST rate and the GST amount has to be separately indicated. Guys, whenever you go to a restaurant, check the bill. Your bill will have the food item and GST separate. It's not given as 100 rupees, they give it separate. Even with the smallest item they give it separate, because section 33 says that it has to be shown separately. The next one is very, very important. I am going to go to a new page for that. Section 34. Guys, sometimes by mistake, let's say electric bike company is buying some batteries from battery supply company, and they've supplied some batteries, but by mistake either the quantity or the tax rate or the value, instead of supplying 1000 batteries, in this they've written 1200. So if the Q quantity or the tax or the value is by mistake more, if the QTV is high, you will have to reduce it. That means you will have to cut it. C for cut, C for credit note. Excellent. So what is the shortcut? The shortcut is QTV. Quantity is high. Actual supply is only 1000, but in the invoice it is given 1200. Actual tax is only 18%, in the invoice it's given 28%. Actual value is only 100 rupees, in the invoice is given 120 rupees. So if any of this happens, the QTV is high, you have to cut it. Cut means credit note. The credit note is very similar to an invoice. It has its own expiry period also, and the credit note is linked to an invoice. So will you issue an invoice after a few months? Will you issue a credit note? Yes. And the credit note will have all the details like an invoice, and will have the reference of the invoice as well. But you can't issue a credit note for secondary discount which are not tick discounts. But what if the QTV is low, guys? For some reason the QTV is low, then you'll have to increase it. Increasing the QTV means increasing the GST, which is dangerous. D for dangerous, D for debit note. So how I remember it is QTV. If the QTV is more, you will have to cut it. Cut it means credit note, C for credit, C for cut. And the QTV is low, you will have to increase it. That will increase your GST, so that is dangerous. D for dangerous, D for debit note. That is section 34. Let's see. Credit note, debit note, continuous supply of goods, continuous supply of services, exempt supply, quarter. Tax invoice is an important document to evidence supply and to take ITC. For ITC matching, invoices need to be uploaded. Physical invoices don't have to be uploaded, only details are needed. 31, 1, 4 and 7 due date, and 2, 5 and 6 again due date. Goods sent for exhibitions etc. against delivery challan, which we will see ahead. HSN code, yes. Guys, HSN code has to be mentioned in the invoice, but it depends on who you are and how big you are. If your last year's turnover is less than 5 crore, then you have to mention if it's less than, no, it's up to 5 crores. If your previous year's turnover is up to 5 crores, then 4 digits of HSN code. But if it's more than 5 crores, that means you're like Amazon or Flipkart, you're a big player, then you'll have to mention 6 digits in the HSN code. Next time you get an invoice, keep it safe. You check the HSN code, guys. Just 1 second. Alright, guys, 31.3. A is additional invoice, revised invoices. B is busy or बहुत सारे in Hindi. C is composition scheme. D is demand advance is demanded, E is refund, and F is full work is to be done by the recipient. The below people may issue a tax invoice, however they may also issue any other document: banks, insurance companies, FIs, NBFCs, passenger transport, goods transport, movie theatres. Particulars in the tax invoice. E-invoicing we will discuss separately, guys. Very important E-invoicing is. QR code and E-invoicing we will discuss separately. Delivery challan, when it's sent for job work, etc. There is delivery challan. 34.1 credit note. 34.2 is debit note. You cannot, unless you are authorized, you cannot collect tax. The amount has to be indicated separately. And now e-way bill. But before e-way bill, let's discuss e-invoice. Okay. Guys, do you think everything is going electronic? Do you order your phone online? Do you buy your phones online? Do you do everything online? Yes. So why shouldn't GST invoices go online? Also, a lot of frauds were happening with fake invoices. So hence the government has now created a concept of e-invoicing. So do we have to go online and generate an invoice? No. This is double work, guys. Why? Because you have to first generate a normal invoice. Whichever software you use, generate a normal invoice like you always do. Then you have to go to the invoice registration portal. An invoice registration portal is a portal created other than the GST portal only for e-invoicing. You have to upload the invoice details and then you will get an invoice registration number along with a QR code. And this is your e-invoice, which you can then send on WhatsApp, email, etc. No physical requirement is there. So normal invoice, you have to generate the normal invoice first, nothing different, using the normal software, yes. Then you have to go to the invoice registration portal, upload the details and generate an invoice registration number with a QR code. Alright, now guys, who needs to generate e-invoice? Anyone whose turnover from the year financial year 17-18, that means the start of GST, anyone whose turnover from the financial year, even in one of the years, has been more than 50 crores, then such people have to generate e-invoice. Yes, so not small people, only if in any of the year your turnover has been more than 50 crore. This limit earlier was 500 crore. They reduced it to 100 crore and now it's 50 crore. So anyone or everyone having turnover of more than 50 crore in any of the years since 17-18. But guys, the following people don't need to generate e-invoice. Very important, the exceptions. First, movie theatres, passenger transport services, goods transport services, banks, financial institutions, and SEZ units. These don't have to generate e-invoice, and now they've also included the government. Even the government doesn't have to issue e-invoices. And what are the benefits of e-invoice, guys? It is basically avoids errors. Errors are reduced. Time is reduced. Efficiency is increased. Then frauds will reduce. Of course, eco-friendly, you will save some trees also. Yes. So all of these are the benefits of e-invoicing. Here it is. Compulsory for most businesses turnovers with 50 crores above in any year since the introduction of GST. E-invoicing is not generation of invoice by a government portal. The taxpayers will continue to create their GST invoice on their own accounting billing softwares. These invoices will then be reported to the invoice registration portal. On such reporting, invoice registration portal will generate a unique invoice reference number, digitally sign it and return the e-invoice to the supplier. A GST invoice will be valid only with a valid invoice reference number, registration number. Not just invoices, even debit and credit notes are covered in the e-invoice. Generate normal invoice, upload details and generate IRN, invoice registration number, not reference number. which will then be issued at the e-invoice. E-invoicing is not applicable on imports and on B2C transactions. In case of RCM, e-invoice is to be issued if the recipient has more than the threshold of limit. Advantages of e-invoicing: auto reporting of invoices. Guys, whatever invoices you generate, e-invoicing, automatically they get filled up in the returns. Auto generation of e-way bill, because they know that this is a supply which is going to go out, so e-way bill is generated automatically. Reduction in errors. Buyer can do reconciliation. E-invoicing will eliminate fake invoices. These are the advantages of invoicing. Of course, eco-friendly also and fast also. But mainly fake invoices will be reducing, and all this auto generation will happen. The following will be exempt from e-invoicing: SEZ units, not developers. Developers will have to issue invoice. You and me, units, you and me, you for units, you and me have been exempted. Movie theaters, GTA, passenger transport, insurance, banking, NBFCs, and now even the government. Guys, on YouTube, I have uploaded a GST notification. On that, whatever latest notifications have come, I have also already uploaded it. You can watch it. You need to be watchful of whatever I upload on YouTube. It's the only the most important things that get uploaded on YouTube. All right. Guys, now is quick response code. What is QR code? Guys, now we all know what is a QR code. Whenever you go to a shop to pay amount, you use a QR code. The QR code is embedded in the e-invoice. But there is a dynamic QR code. What is dynamic QR code? Dynamic QR code is where when you scan the code, you don't have to put the amount also. The amount is also there on the invoice. So let's say I'm buying an electric bike, and they give me an e-invoice with the QR code dynamic. That means the dynamic QR code, what is dynamic? I can punch the QR code, I can scan the QR code, and the amount will also be written. I don't have to punch in the amount also. That saves a lot of time. Yes. Dynamic QR code also has been made compulsory for those people whose turnover is 500 crores or more from 17-18 onwards. Dynamic QR code is okay, but e-invoicing is very important. But they've already asked a question on e-invoicing already. All right. Abhi, you already have asked me this question numerous times. I've already answered this question in today's session only, guys. That whatever QuickBook is there, you can easily access it. And if there is something, I will update it more. But otherwise, you can easily access the QuickBook that has already been uploaded. Please check. All right. Guys, this is the invoice chapter. Now we are at e-way bill. Very, very interesting concept, e-way bill. And then we'll be left with only one chapter, that is returns and some exemptions. So we are good. It's been 1 hour 10 minutes that we've been in this lecture. Let's take a 5-minute break. Let's come back. So guys, for all of y'all, let me just tell you the Google Drive, which I am going to again share the link here, that has a QuickBook which has been updated up till January. But don't worry, you can always use it. If there is some minor changes here and there, I will also update it. But you can use it, no problem at all. All right, 5 minutes and then we are back. Thank you. All right, and we are back. Guys, this session is on e-way bills. We have a returns chapter left and then we will be done. Very glad we are moving steady on our GST portion. I've already uploaded the QuickBook here. You can definitely access it, use it. In case there's any issue, let me know. Otherwise, we are good to go. Okay. Guys, what is e-way bill and what is the requirement of e-way bill is what we are discussing. So, just 1 second. Thank you. Okay, so Section 68 and Rule 138 are two things you will quote whenever you are looking at e-way bill. No, nothing more, just Section 68 or Rule 138 or both you will quote. Now, what is this e-way bill? Guys, whenever the electric bike company is supplying their bike on a vehicle, because to evidence a movement, what is this movement for? They have to issue an e-way bill. So e-way bill has to be issued. Is it compulsory? Yes, if the supply is more than 50,000, and here for the first time this 50,000 includes tax of GST also. So if the bike is for 45,000 but the GST is 6,000, so 51,000, it's more than 50,000, so there will be e-way bill. Yes. Next, guys, this e-way bill has two parts, part A and part B. Part A has all the details of the supplier, the recipient, etc. What are the goods, what is the quantity, what is the value. And part B has all the transporters details, who's transporting, what is the vehicle number. And part B also has the vehicle number, which is one of the most important things. Who can fill and generate this e-way bill? The supplier can generate it, or the recipient can generate it. Whoever is causing the movement can generate it. If the supplier is registered, he will generate it, or else the recipient can also generate it. There is an amendment that may happen. It's not yet happened. It's not been notified yet. The transporter, if the goods with him are more than 50,000 overall, the supplier, let's say there are 10 suppliers supplying goods worth 6,000 each, it becomes 60,000. The transporter can also generate the e-way bill, but that has not been notified yet. Next, can the e-way bill be modified? No, it cannot be modified. Only thing that can be modified is the vehicle number and the transporter's details. Otherwise, it cannot be modified. Can it be cancelled? Yes, it can be cancelled within 24 hours of its generation. It can be cancelled. Does it have to be accepted? Yes. If the supplier issues or generates a e-way bill, the recipient has to accept it within 72 hours, or by default before it reaches you have to accept it, otherwise it will be deemed acceptance. Is there any validity of e-way bill? Yes, and there is a change here in this, guys, so it's important. Validity of e-way bill, it is 1 day for every 200 kilometers. So if let's say you are going somewhere which is 650 kilometers, so divide by 200, you will get 3 point something. 650 divided by 200 will give you 3.25. So you will get 4 days, 3 days and 25 will be 4 days. But if it's over dimensional cargo, like big cargo, or if one of the transport modes is waterways, then it will be 1 day for every 20 kilometers. So suddenly becomes very slow. Yes, it suddenly becomes very slow. Next, this e-way bill is compulsory in certain situations, more than 50,000. But even if it's less than 50,000, this 50,000 limit will not even be seen if it's transport to a job worker or it is handicraft goods. Two cases where you will not see this limit: when you are sending goods to a job worker, and when you are supplying handicraft goods, you will compulsory require an e-way bill. Yes. If you are sending the goods to a nearby place within the same state, intra-state, up to 50 kilometers, then you don't need to upload part B. Part B you don't need to upload. Intra-state up to 50 kilometers, if you are sending the goods, then you don't need to upload part B. Alright. Anything else? Just let me check in e-way bill. Yes. If your goods are going in 2 different trucks, you will need 2 different e-way bills, and every time a truck is stopped, the e-way bill vehicle number should match with the actual truck number. They should be matching. Next, The transporter can generate a trip sheet or a consolidated e-way bill. A consolidated e-way bill is nothing but like an index of a book. It has details of all the different e-way bills inside. Next, the information which is given in e-way bill can also be used to file your GST returns, because e-way bill means you're sending the goods out, and GSTR1, which we will see in returns chapter, is also about outward supply, so you can use one to fill up the other. Alright. Guys, can the truck or the transport be stopped by the officer? Yes, the truck or the transport or the conveyance can be stopped. If it is stopped, there is no authorization required, they can stop it. But if they want to do detailed investigation, then they need a proper authorization. If it's stopped for more than 30 minutes, then you can upload a report as to why it was stopped for 30 minutes. And the officer who has stopped it, has to upload a preliminary report within 24 hours and then a proper report within 3 days. Alright. Next, something very important has happened, guys. If you don't, there are some situations where you can't generate the e-way bill. If you can't generate the e-way bill means what? Means you cannot make any supplies. That is what is, you can't generate e-way bill. What are the situations in which you can't generate the e-way bill? If you've not filed your returns for a particular number of months or a particular number of periods, if you have not filed, then you cannot generate e-way bill. Also, if your registration is suspended, if you remember, guys, whenever the government wants to cancel the registration, they will first suspend it. If it's suspended, even that duration, you cannot generate e-way bill. Here it is. Part A of the e-way bill will not be allowed to be filled if the composition scheme dealer has not filed the return for 2 periods. If the normal scheme, regular scheme person has not filed the returns for 2 months, or registration has been suspended, or the GSTR1 is not filed for 2 months or 2 quarters. So basically, not filing return by regular persons, composition scheme person, not filing GSTR1, and registration being suspended. These are reasons where your e-way bill cannot be generated. If your e-way bill cannot be generated, then how will you make supplies? So that is a punishment for doing something like this. And guys, if you don't create an e-way bill and you send the truck without the e-way bill, and if it's caught, then the goods can be detained and you can be penalized with a fine up to 10,000 rupees. And just one last thing, guys, some people don't require e-way bills. Example, if you are transferring currency and you generate e-way bill, it is risky. Same if you are transporting jewelry, corals, precious stones, you do not require e-way bills. If you are sending postal articles, you do not require e-way bills. If you are sending something through e-rickshaws, then you do not require e-way bill. If you are sending defense products, you don't require e-way bill. If you are sending empty cylinders, empty containers, you don't require. So there is a whole list, you don't have to by heart it, just remember the shortcut. Postman, used, LPG, kerosene, cycle rickshaw, for pearls, jewelry, currency, coral. So pearls, jewelry, currency, coral are very precious and hence don't generate e-way bill, they might get robbed. Cycle rickshaw, kerosene, LPG, used goods and postal goods, no e-way bill. Sending goods to Nepal, Bhutan, customs, exempt goods, defense good, notified alcohol, and those 5 products, on those transportation there is no e-way bill. Empty containers, cylinders, if you're sending goods for weighment, guys, sometimes you're sending the goods only to weighing and back. In that case, up to 20 kilometers if you're sending. And if the government is sending goods through rail, in these cases you do not require e-way bill. This list is not important, you just have to read it once and you'll be okay. Alright, the proper officer can stop the vehicle without permission, but he has to upload a summary report within 24 hours and a final report within 3 days. Once a physical verification is done in one state, it cannot be again checked again. You cannot harass a transporter. And if the vehicle is stopped for more than 30 minutes, the transporter may upload details. Guys, this is the e-way bill chapter, the invoice chapter. Now what I'm going to do is what we do always. I'm going to upload the module so that we can do those questions as well, taking you to the last page so we can upload the module as well. This is the tax invoice chapter. Here we go. Yes guys, please read and tell me the date by which the invoice should be issued, the due date. Guys, over to you all. Excellent guys, it's goods, and the goods were removed from the factory on 29 September. So this is the due date 31/1. Next, this one guys looks like a continuous supply services. Over to you all. When should the supplier issue invoice for services rendered? Guys, continuous supply of services is section 31(5). So you open the contract whenever their due date is mentioned. During the year, it provided the services on April 1, July 1 and October 1. Due date is not given, but completion of event is given, that is April, July and October and January. So by then the invoice should be issued. So for April, July, October and Jan. Next, question number 3, revise invoices guys, 31(3)(a). Please read and tell me. It has sought your advice regarding period of issuance. By when should the revised invoices be issued? Guys, you applied for registration on 3rd September. You were granted on 6th September, but were you applying within 30 days? Yes. So your effective date is 12th August. So now from 6th September, you have to issue revised invoices within 30 days. That means till 6th October. Guys, if you're not focusing on these, you're missing out from exam preparation. Trust me, if you're just listening to me and you're saying that sir will say and I will not calculate, you're missing out from exam preparation. You are going to miss the bus. I've seen a lot of good students this time not clear their exams, and a lot of average students clearing the exam because of the hard work. So if you're missing out on the hard work, you're missing out on the marks. Sorry, this degree and this result is only for the people who put in the work. All right. Next. Guys, they've asked you whether it is mandatory for a person to issue a tax invoice. Advise Sham Fabrics. They're under composition levy scheme, so they don't have to issue a tax invoice. What they can issue instead is a bill of supply. Excellent, Nikita. Good job. Next is the 5th question. Guys, in 5th question, there is a supplier who's supplying outfits in Delhi, and they get a makeover also of their models from a beauty parlor. So there is a beauty parlor which is supplying beauty services worth 5 lakh rupees. Examine whether the tax invoice has been issued within the time limit prescribed. So guys, for services, within how many days do you have to issue the invoice? 30 days. And here, Aura Beauty Services has issued the invoice on 10th February, whereas the services are performed on 4th Jan. So are they within time? No, they are late. They are after the due date of 30 days. Next, guys, is a very simple concept. The tax consultant of the recipient, Royal Fashions, has said that, listen, in the invoice, the tax charge has to be shown separately. But Aura Beauty Services says that there is nothing, no mandatory requirement, and they have put only one lump sum amount of 5,90,000. So you have to quote section 33 that amounts have to be shown separately. Yes, amounts have to be shown separately. Next guys, over to you all. The sixth question. There are some toys which have been returned by Nancy General Store. Which document Kidsy Toys is required to issue? Guys, in case of returns, what is the document to be issued? We have not discussed it. Think about it. Good answer, Abhi. Guys, here in this case, I told you whenever the QTV is high, you have to cut it down, you have to issue a credit note, but I forgot to mention it that whenever you return goods, you will be also given a credit note, but I thought you will guess it because whenever you return some goods to a shopkeeper, generally they give you a credit note. Guys, Rana Sangha is a very busy person, so he has made some small supplies. So please tell me, in these cases, will he issue an invoice? On the 5th of April, 1200 rupees. Will he issue an invoice? Yes. Next. Sorry, these are all revised invoices. These are all required returns. That's okay. Returns is okay. Next. Chidanand Products Private Limited is a registered supplier who has opted for composition levy. He wishes to know whether issue of bill of supply can be dispensed under any circumstance. No, you have to issue a bill of supply. A registered person has to mandatorily issue separate invoices for taxable and exempt goods. Guys, do you have to waste paper by issuing taxable and exempt different invoices? No. You can issue an invoice cum bill of supply. A non-banking finance company can issue a consolidated tax invoice at the end of every month. Yes. For a bank, whatever document they issue can be treated as an invoice. They don't have to have serially numbered. They can issue one invoice at the end of every month. Determine the time of issue of invoice. Due date, guys. Over to you all. Question number 11. Due date of invoice. Excellent. 11th of October is when the goods were removed. So that is the due date of invoice. Nikita, Abhi, good job. Next. Again guys, determine the time of issue of invoice. It's an event management company, so services. June 5th, so by 5th July, you have to issue the invoice within 30 days. Next. Uday Singh has received advance payment. His accountant asked him to issue the receipt voucher. However, he is apprehensive as to what will happen in case a receipt voucher is issued, but subsequently no services are supplied. Guys, if the services are not supplied, can you issue a refund voucher after that? Yes, you can issue a refund voucher. Excellent. Bhojraj has availed GTA services on which he is liable to pay tax under reverse charge. So he is the recipient. Yes. He wishes to know whether he is required to issue an invoice. Yes. Not just an invoice, you also have to issue a payment voucher. Next, Sitaram Textiles has to send cloth for dyeing to a job worker. He wishes to know whether he needs to issue a tax invoice. For job worker, you don't need to issue a tax invoice. You need to issue a delivery challan. Perfect, guys. These are the questions. Guys, just make a note in your notes or wherever you can that for tax invoice, you also have to go through the illustrations. There are some illustrations in the book. If we can go through them right now only, we'll go through them. Just 1 second. A consignor hands over his goods for transportation on Friday to a transporter. The transporter starts the movement only on Monday, so the validity will start only from Monday. So whenever guys part B is filled up, only then the validity starts. Yes. Let's see. Babbal Associates is moving the goods from Cochin to Chandigarh through road, ship, air and road again. First, Babbal Associates generates the e-way bill by entering first stage of movement. From its place of shipyard, enters the vehicle number. Next, it will submit the goods to the shipyard and update the mode of transportation as ship. and transfer the document on the e-way bill. After reaching Mumbai, guys, can you change part B? Yes, you can continuously change part B. That's no problem at all. Bhanu Pratap shoe manufacturers registered in Punjab sold shoes to a retail seller in Gujarat at a value of 48,000 excluding GST of 18%. So 48,000 into 118 is 56,640. Guys, do we have to issue a e-way bill? Yes. Why? Because it's more than 50,000 including GST. Perfect. So guys, watch out for questions. We will see examination questions and then we will see more. Tomorrow's day will be dedicated to more and more questions, guys. We are done with one more chapter called returns. Sorry, we are done with one more chapter called invoice, guys. We will do returns chapter next. But just telling you, today we'll try and finish all the chapters. And tomorrow's day, we will only and only be doing questions from the RTP, from the MCQ booklet, which is released by ICAI. So I'm sure they will put questions from that in your exam, and from previous past papers. So tomorrow's session is going to be very, very helpful to get you exam ready. The problem is people finish concepts and they feel that we are done. No, you're not done until you do this. And in your personal purpose, guys, you have to start solving some questions. 3 questions per chapter you have to definitely solve. So will you start DT tomorrow? No, I'm not going to start DT tomorrow. I'm only and only going to do all these questions. MCQ booklets, past papers and RTP questions, all of them. Special attention on MCQ booklet. Guys, 2 minutes and we continue. 2 minutes, please. Alright, and starting the last chapter for today, that is returns. Whatever small exemptions will remain, we can continue them tomorrow, but today's chapter will be done, which is called returns. Let's try and see what is this in this chapter. So I'm just taking you to returns here. Yes. Guys, returns are always filed to tell the government what you have done. So in GST, electric bike company, which is basically a registered supplier, battery supply company, which is also a registered supplier, we all have duties to file our returns, and our returns in GST don't just have an impact on our calculations, but they also have an impact on the others' calculations. Let's see. First, when battery supply company makes any outward supply, they have to file a return called GSTR1. GSTR1 is basically for all outward supplies, that is GSTR1, and that is proof that yes, I have made these supplies to other persons. Whenever you upload the details in GSTR1, they have to be uploaded by the 10th of the next month. Practically, it's been extended to the 11th of the next month. Next, whenever you're providing the details, you don't need to upload the invoices. You need to only give the details of your outward supplies. You need to give invoice-wise details of your B2B supplies. That means if you're supplying to registered persons, be it normal person or composition scheme, the other person might take GST credit and hence you need to give B2B supplies. But if it's B2C, that means if you're giving to consumers, then you don't need to give invoice-wise details. You can give consolidated unless it's interstate more than 2.5 lakhs. Even if you've not made any supply during the month, you can also file your nil return, and that you can file through SMS facility also. Guys, GSTR1 is to be filed by everyone except few people. The shortcut is not compulsory. Only these people don't have to. What is the shortcut? One is input service distributor, non-resident taxable person, OIDR, TDS, TCS person, and composition scheme dealer does not have to file GSTR1. I am repeating, guys, the shortcut is not compulsory. Input service distributor, non-resident taxable person, OIDR, TDS, TCS person, and composition scheme guys don't have to file GSTR1. Why? They will file something else. Yes. Next guys, in this GSTR1 you have to file HSN details also. Same, if your turnover is up to 5 crores then 4 digits, if it's more than 5 then 6 digits of HSN code. Once you upload this GSTR1, can you change it? Can you go back and revise it? No, because when you upload the GSTR1, the things get auto populated in GSTR2A for normal people and GSTR4A for composition scheme dealers. It gets auto populated. Yes, A is for auto populated. Next, if you have any mistake, example, you made 2 supplies which you forgot to put in here, then don't worry. You can always, whenever you get to know about that mistake, you can incorporate that in that month's return. So you cannot go back and revise. No, you cannot go back and revise. But you can incorporate it in that month's return. Yes, you can incorporate it in that month's return. There is no problem with that. And when you incorporate it in that month's return, if there is any tax payable, then you will have to pay with interest. Guys, this is GSTR1. Now, going to the next GSTR. This is, by the way, section 37. How do I remember? 3 plus 7 is 10, 1 plus 0 is 1, that is GSTR1. Next is section 38, but that has not been activated as of now, that is GSTR2. That is basically on your inward supplies. Do you need to file anything on your inward supply? No, it has not been notified yet. And then one of the main sections is section 39, which talks about one of the main returns, that is GSTR3, but GSTR3 has not been notified, so we have GSTR3B. I call it the beta version of 3B. In GSTR3B, it's a consolidated invoice. In this month, whatever supplies you've made, on this whatever is your liability, minus whatever credit you can take, and overall what is your liability, and you have to pay this GST tax. Yes, you have to pay this tax. Guys, this also is not supposed to be filed by, is not compulsory. These people don't need to file GSTR3B as well. GSTR3B has to be filed by the 20th of the next month. So first GSTR1, then GSTR3B has to be filed by the 20th of the next month. Even if you don't have any liability, you have to file a NIST GSTR1, GSTR3B, you can use the SMS facility. And again, you cannot go back and revise once you submitted it. So you can incorporate any mistake that can be changed. Yes, you can change the mistake under section 39.9. Any mistakes can be rectified in the month you discover the mistake, but up to a certain expiry period, which is same like section 16.4, 30th September return due date, 20th October, or the annual return filing date. Guys, we are still in section 39 only. I told you composition scheme dealers wake up 4 times because they will file something called GSTR4. This is to be filed by composition scheme dealers, GSTR4. And composition scheme dealers, this has to be filed by 30th April after the year ends. Yes, so they don't have to file anything during the year. No, and that's why this scheme is easy. They don't have to file anything during the year. Only they have to pay every quarter. GST, CMP 08, they whatever every quarter supply they have to make, 1%, 5%, 1% or 6% they will have to pay every quarter. Yes, by the 18th of the month after the quarter. So April, May, June they have to pay by 18th July. July, August, September they have to pay by 18th October. So payment they have to do every quarter, but return they have to file only once in a year, that is by 30th April. Guys, here if you come out of the composition scheme during the year, then you have to file till you were in the composition scheme. You have to follow this. After you're in the get out of the composition scheme, you have to file GSTR3B. Next, we are still at section 39. The next one is the person who goes to 5 countries. I kept telling you the non-resident person went to 5 countries because GSTR5 is for a non-resident taxable person. A non-resident taxable person, as you know, has compulsory registration. They also have to pay the GST in advance. So they will file their GSTR5. Yes, they will file it. by the 20th of the next month, or within 7 days of the registration coming to an end. So let's say their registration is coming to an end today, that is 27th Feb, then within 7 days or 20th of March, whichever is early, they have to file their return by then. And if they have to take some refund, they can file their return and take a refund. It's very, very simple NRTP, but this date is important, within 7 days of their registration ending or 20th of the next month, whichever is early. That is GSTR 5. GSTR 6 is not for you, 7 is not for you, 8 is not for you, 9 is not for you. GSTR 10 we will do, GSTR 9 is there, sorry. 9, 10 is there, we will see what that is. Guys, every year there is a section, we'll go step by step. Section 40 is called the first return. Guys, first return is nothing different. It's like your first salary. Is it different from your normal salary? No, but it's a special salary. Same way, section 40 says that if you are registered in time, if your registration was done in time, that is 27th Feb you were registered, and that was your effective date, then during this period whatever supply you made, you will include them in the first return. First return is nothing different, it's just the normal return, it's called the first return. However guys, something that takes us 44 hours and for which we charge 9 lakh rupees is the annual return. Very, very important. You know, the annual return has to be filed after the year ends by 31st December. So for this year 21-22, 31st December of 22 you will have to file your annual return. This is the due date. You can always file it before also, but this is the due date. Annual return is to be filed by everyone except is not casual. Here the shortcut has changed a little. Input service distributor, NRTP, OIDR, TDS, TCS and casual taxable person don't have to file their annual return. Otherwise everyone has to file the annual return by 31st December. Some people also have to get it reconciled by a CA, so that the form is GSTR 9C. Some people have to file it 9A, these are composition scheme dealers. 9B are e-commerce operators. How do I remember? I'll give you a shortcut guys. GSTR 9 is the annual return. Why? Because CAs charge 9 lakh rupees for it and it takes 44 hours to do it. That's how we remember it. GSTR 9C is a reconciliation or audit by a CA. C is for CA. 9A is Aram. People who do Aram are composition scheme dealers, so they will file the annual return in 9A. And e-commerce operators are big, Amazon, Flipkart, etc. So 9B, if you can remember. Otherwise GSTR 9 is okay for annual return. And guys, very, very important is section 45. Guys, after 45 crores of business and being in business for 10 years, you decided to close your business. So when you shut your business or you cancel your registration, you will file your final return. Very important guys. So final return in section 45 and GSTR 10, how do you remember it? After 45 crores of sale over 10 years, you file the final return. But when do you file the final return? Guys, this is to be filed within 3 months of letter of order of cancellation. Let's say order of cancellation you got today, 27th Feb, but date of cancellation is 15th March. So whichever is later, 15th March, from 15th March you have to file final return within 3 months. And guys, there is a misconception that if you file the final return, you don't have to file the annual return. No, final return is over and above any other return. So other returns you have to file plus the final return you have to file. Next, and very loose few sections are left guys. If you don't file your return, you will get an email intimation from the officer GST department that knock knock, listen, you have not filed your return. From that intimation, you know that you have been late for filing the return, and if you are late, then under section 47 you have to pay some late fee. Do you remember guys, late fee, a question we had done on late fee, which can be paid only in cash. This is not tax. So section 47 says that you have to pay a late fee. Late fee is rupees 100 per day or maximum 5,000 So if the delay is 60 days, will you pay 66,000? No, you will pay maximum 5,000. This is for all returns, yes, under section 37, 39, 40, F5, etc. But if it's the annual return, then the late fee is slightly different for annual return. The annual return late fee is rupees 100 per day, or 0.25% of your turnover. That is the annual return late fee. So this is the late fee under section 47. And guys, sometimes you can't afford to go to a CA for GST purposes. So the government has created an army of people called GST practitioners. We are going to call them GSTPs. Who is this GSTP? This is any person who is an Indian citizen, who is of sound mind, who is not who is solvent, and he has to have a qualification. So these are the mandatory things: Indian citizen, sound mind, solvent. He has to have a qualification, so he should be a graduate or a postgraduate, etc., in banking, commerce, business, finance, accountancy, etc. He can be a CA, CS or CMA, not half cleared, full cleared, or he can be a sales tax practitioner. Before GST, guys, there was sales tax. If you're a sales tax practitioner for X number of years, or you were in the commercial tax department of the government for X number of years, then you can be a GST practitioner. But GST practitioner is not automatic. You have to apply for it, enroll for it. Yes, you have to also pass certain exams every 3-4 years. You have to keep updating yourself and pass a small exam to continue as a GST practitioner. It's not automatic. You have to enroll for it, and they give you a number, which is the GSTP number. As a GST practitioner, can you do everything? Yes, you can almost do everything for your clients, but you will get separate user ID. Yes, your clients have to authorize you. Only then you can do whatever they want you to do. And every time you submit something, they will get an OTP and they have to verify it that they agree to what you've done. So if there's any mistake, who will be held responsible? The client will be held responsible for any mistake. You will not be held responsible. That's the best part about a GST. Let's have a look from this book, guys. Under GST, every registered person, including composition scheme dealer, needs to file returns. Guys, there is one change of IFF. I'll tell you once we finish. There's a new scheme called quarterly return monthly payment scheme. You have to file the returns either monthly, quarterly or annually. Under GST, the tax has to be self-assessed, and based on the same, return needs to be filed. So you only have to assess and file your return. Return filed by one person has an impact on the other person as well, the supplier and the recipient. Returns are to be filed online or through GSPs, that is GST Suvidha providers, or on GST and offline models. Section 37 is GSTR 1. In this case, GSTR 1, it's a statement of outward supplies. Who has to file it? Everyone except is not compulsory has to file it. When is it supposed to be filed? By the 11th of the next month, 13th in case of QRMP, but I will talk about that scheme soon. The GSTR 1 has to give details of the outward supplies, credit notes, debit notes, everything. B2B, you need invoice-wise details. B2C, you don't need invoice-wise details unless it is interstate more than 2.5 lakhs. Nil GSTR 1 you can file even through SMS facility, HSN code, up to 5 crores, then 4, and above 5 crores, then 6-digit code. The details of GSTR 1 is auto-populated in GSTR 2A for normal people and 4A for composition scheme. GSTR 1, if there is any errors, etc., you can go back and change. No, you can incorporate in the month you change, but subject to the expiry period, which is the same as section 16.4, that is 20th October annual return filing date. Scanned copies of invoices are not required to be uploaded. GSTR 2 is not been notified yet. GSTR 3B is the main section, section 39. This is summary of all the inward, outward payment, etc. It's a temporary replacement of GSTR 3. By 20th of the next month, you have to file this. In case of quarterly return, I'll tell you the date later. It has to be filed by every person except is not compulsory. SMS facility is available for nil, and return is valid even if tax is not paid on the same. Sorry guys, this is a wrong statement. I'll update in the new QuickBook. I will update it. Guys, you have to pay tax otherwise the return is invalid. GSTR 4, guys, 4 times a composition scheme guy wakes up and he has to file GSTR 4 by the 30th of April, but every quarter he has to pay GST CMT 08, he has to pay the GST every quarter by the 18th of the month after the quarter. Details of GSTR 1 are auto-populated in GSTR 4A, and once you come out of it, still you have to file this for the year, because in the year you are in the composition scheme. Okay. GSTR 5 is non-resident taxable person, 5 countries. Next, it has to be filed by 20th of next month or within 7 days from the expiry of registration. Next, 39.9 defective returns, rectifying. You can rectify the returns, yes, but if there is any GST to be paid, you'll have to pay it with with interest. Section 40 is first return, nothing important, but this is very important, annual return. GSTR 9, 9A, 9B, these are all annual returns. Annual return has to be filed by everyone except is not casual. The state shortcut changes here. It has to be filed by 31st December. You can file it earlier. For the first 2 years, annual return requirement was removed because it's the first 2 years, so they gave an exemption up to 2 crore of turnover people. Next, final return, section 45, GSTR 10, within 3 months from date of cancellation, date of order of cancellation, whichever is later. Final return and annual return both have to be filed. Final return is additional return whenever the GST is being cancelled. Notice comes in section 46 and late fees have to be paid in section 47. 100 per day of 5,000 or 100 per day of 0.25 in case of annual return. GST practitioners, Indian citizen, not insolvent, not of unsound mind, and having required qualification in commerce, banking, CMA can be a GST practitioner. Retired officer in commercial tax department having 2 years or more experience, or a sales tax practitioner having 5 years or more experience can also be GSTP. You need to be registered, separate login. You can only perform the tasks that have been authorized to you, and you need to pass some examinations. Alright. Now quarterly return, monthly payment. Let me explain. This is a very important scheme and might be there in your exam as well. So class up to 8:30 or 9. Class I think should finish in half an hour, guys. Today we will finish the class by 8:30. Alright, this is the only thing left, guys. Once we finish that, in fact we might even finish earlier, we'll see how it goes, but this is what I want to do, and then a question from the module, and then we are done. Okay guys, quarterly return, monthly payment scheme, very important because it is new. Here we go. Guys, this is battery supply company and they supplying batteries to electric bike company, and electric bike company wants to take credit of the battery of the GST on the battery supply company's batteries. This is also registered and they are also registered. But guys, battery supply company says that I don't want to file GSTR 1 every month. That means I have to file 12 GSTR every month if I file. I don't want to do this. So they went to the government and they told the government that, government, listen, can we file every quarter? Quarterly return. Can we file every quarter? The government said, why not? If your turnover is up to 5 crore last year, that means you're not very big. If your aggregate turnover is up to 5 crore last year, then you can use quarterly return. And quarterly return means you don't have to file 12 returns, you'll only have to file 4 returns. So congratulations, they took up the option. You have to avail the option. Yes, you can avail the option. And the best part is this option can be availed even by one entity. Example, if there is battery supply company Maharashtra and Gujarat, both don't have to together take this option. You can take this option. Gujarat might not take this option. In this option, you will file the return every quarter. So for Jan, Feb and March, let's say this battery was supplied today, 27th Feb. You can upload GSTR 1 for Jan, Feb and March in April by the 11th, or sorry, by the 13th of April. 13th of the next month. But this is problematic for electric bike company because they won't get the credit till April. And they don't want to wait till April. So what electric bike company said, they also went to the government and they complained that this quarterly return is a problem for them because they don't get credit. So the government said, let's come to a midpoint. Although the return will be filed quarterly, but if there are people like electric bike company who are waiting for their credit, you may have supplied batteries to many people, but whoever is waiting for the credit, that is B2B supplies, why don't you pay the GST every month? You do a monthly payment only for these people. Okay. So if you made 1, 2, 3, 4, 5 supplies, out of them only one is B2B supply, only for that you file an invoice furnishing facility. This invoice furnishing facility is the monthly facility, so quarterly return but monthly payment, and that's why the scheme is called QRMP, quarterly return monthly payment scheme. So you file an IFF every month, yes. So for January by 13th Feb, for February by 13th March, you will file an IFF by the 13th, yes. And in that IFF, will you put all the supplies? No, you will only put the B2B supplies. And you can put up to 50 lakhs of B2B supplies in the IFF, in each IFF. So January, will you file an IFF? Yes. February, will you file an IFF? What if you don't have any B2B supplies? Then no IFF. But if you have any B2B supplies, then you can put IFF every month. For January, you can file by 13th February. For February, you can file by 13th March. And then for March, you can file straight away the GSTR1. So basically, for the first and the second month, you will file IFF. And for the third month, you will file the normal GSTR1. And when you file GSTR1, will you again put first and second month details? No. B2B details don't have to be put again. So again, revising guys, this scheme is called quarterly return monthly payment scheme. It's a scheme that can be used by a person whose turnover last year is up to 5 crores, and this year also till you reach a quarter turnover of 5 crores. That means the moment you touched 5 crores or more, you have to be out of this scheme. You have to avail the scheme, yes. You can avail it per registration, not per PAN. That's a good thing. Here you have to file only quarterly returns, yes. But if there are B2B supplies, can you file monthly IFF? Yes. So that these guys can take credit, yes. The IFF can be filed for the first and second month by the 13th of the subsequent month. And based on this IFF, the B2B supplier or the recipient can take the credit. So both the problems are solved. Here in quarterly return monthly payment, when you file your GSTR 3B, that can be filed by 22nd and 24th. So both places you get extra days. IFF can be filed by 13th, not 11th. And GSTR 3B can be filed by 22nd in some states and 24th in some states. You don't have to buy hard the states. Guys, what is the benefit of this scheme? The benefit of this scheme is you can file quarterly returns. So for the supplier, does the return reduce? Yes, only 4 returns of GSTR1 and 4 returns of GSTR 3B. And for the recipient, they can file monthly IFFs also. So for the recipients, they can also get credit. Yes, so both problems are solved. And here guys, whenever you file your IFF, there are 2 mechanisms so that you don't waste too much time. There is a self-assessment mechanism, whereby every month you will see how much you've supplied, how much you've purchased, and then you will do the calculation and you will pay the GST. Or there is a fixed sum method whereby you don't have to do any calculation. Whatever you paid in the last month, same amount you pay. So whatever you pay in the last month, 100% of that amount you pay. So last month if you paid 10,000 cash, this time also you pay the same amount. And what if last year you filed quarterly return, then this time you pay 35%. So if last time you filed a monthly return, that 100% of the same, so you don't have to do any calculation. Last month, did you file IFF? Yes. How much did you pay? 10,000. Pay 10,000 now. But last month, what if I was in the quarterly, not in the quarterly scheme, or what if I filed a quarterly return? Then pay 35%. So in fixed sum, you don't have to do any calculation. Yes, it removes the burden of calculation. And finally, when you pay any amount, let's say in the fixed sum method, you paid 25,000, but you should have paid 28. On that 3,000, will there be any interest? No, because they have told you fixed sum. But if you choose self-assessment and you pay 25,000 after all the calculations, and later you realize you should have paid 28, on the 3,000 you will have to pay interest. Yes. Let's read, guys. And last thing, yes, by when can you take up this option? Guys, let's say you want to take up the option for January, February and March. Then you will go to the previous quarter. So the previous quarter, that is October, November, December quarter, you will go to, and last one in that 1st of November, from that to 31st of Jan, anytime you can. The shortcut is 1-2-L1. What is 1-2? The first of the second month, 1-2, till the last day of the first month, that is 31st Jan. I'll tell you the shortcut again. 1-2-L1. What is 1-2-L1? The first day, day first. So what is the first day of the second month? 1-2-L1. So first day of the second month and last day of the first month, that between this period anytime you can avail the option, and once you avail the option it will continue till you want to get out of the option. Let's read this, guys, very, very carefully because it's new and MCQ is expected on this. It is an optional scheme for registered persons having aggregate turnover in the preceding financial year of max 5 crore. This scheme will lapse from the quarter in which the turnover exceeds 5 crore. The option can be taken per registration and need not be taken for all the entities under the same PAN. To exercise the option, the last return should have been filed. Option can be entered into from the first day of the second month of the previous quarter up to the last day of the first month of the current quarter, which is confusing. So hence 1-2-L1. The first day of the second month in the previous quarter, and this quarter the last day of the first month, 1-2-L1. Even though GSTR1 has to be filed quarterly under the scheme, it allows for invoice furnishing facility whereby details of the outward supply for the first and second month can be filed through IFF, while details of the third month can be uploaded in GSTR1. IFF facility is not mandatory and registered person can file GSTR1 monthly as well. So this is only an option, yes. Total invoice details under each not exceed 50 lakhs. IFF facility has been introduced so that the buyer, that is electric bike company, can avail ITC. IFF can be used for B2B supplies where the counterparty wishes to avail ITC. For the remaining supplies, one can use GSTR1 quarterly. Details uploaded in IFF are also auto-populated in GSTR2A to the recipient can avail ITC. IFF facility is open from 1st to 13th of the relevant month. So from 1st to 13th, you can file your IFF. Guys, when you file your IFF, QRTP will also be applicable to 3 crore turnover. Yes, up to 5 crore. Alright. Guys, while you file the IFF, you are telling the government that listen, I have supplied to electric bike company GST worth 16,000 of goods. Then this 16,000 you have to pay by the 25th of the next month. So if there is giant IFF, you will file it by 13th Feb and you will pay the 16,000 by 25th Feb. While the returns can be furnished quarterly, the payment of invoices uploaded in IFF has to be done by the 25th of the month. Once if this option is exercised, it shall continue unless revised back to the monthly option. Details in IFF are in the same form as the details given in GSTR1, that is invoice wise details you have to put. Guys, this facility will not be given to you if your turnover crosses 5 crores or if you don't file your return. Payment can be made in two modes, guys. There is fixed sum mode and self-assessment mode. In fixed sum, you don't have to calculate anything. If the last month's return was monthly, then 100% of the tax paid in cash. And if last month's return was quarterly, then 35% of the tax paid in cash. Whereas self-assessment, you will assess, and hence if there is any difference, you will have to pay tax in the self-assessment method. In case of shortfall, interest will have to be levied, but here no interest will be levied. And GSTR 3B, you also get some more time, so you can file by the 22nd or 24th of the month. Perfect. Guys, for this chapter as well, the best way to test your knowledge is through sums. So I'm just uploading it. That's the last thing that we will do, and then we will end the session. So here we go. This is the returns chapter. Okay. Yes guys, you all can participate and answer. First question over to you all. Please tell me, can this be done? Is he required to file GSTRB? Yes. He can file a nil GSTRB? Yes. Just 1 second. Next, if a return has been filed, how it can be revised if some changes are required to be made? Can you revise the return, guys? No, returns cannot be revised. So how do you change it? You change it by, in whichever month you've discovered the mistake or the omission, in that month's return you can make changes. Yes. Next, there's a Cavron Enterprises supplier of dresses under the regular scheme, aggregate turnover of 30 lakh in the previous year. It is of the view that the current financial year it's permitted to file its statement of outward supplies on a quarterly basis, while the accountant advises it to file on a monthly basis. Can Cavron file monthly? Guys, can they file quarterly basis of return? Yes, up to 5 crore of turnover. You are now eligible for QRMP scheme, so you can file quarterly return. But guys, on dresses, anyways, no one will get credit. So will you have to file an IFF? No, because there will be no B2B buyers. If there are some B2B buyers, that means some people who are buying from you and selling it ahead, then you will have to file IFF every month. Next, please read and say, is he correct? He believes that as there is no transaction, there is no need to file GSTR1. Absolutely wrong. He has to file GSTR1 even if there is no supply. A nil GSTR1 has to be filed in SMS facility also. He can file that. SMS is only an option, guys. Next, SMS is only an option for nil, and that too it's an option. You don't have to compulsorily do that. None of my clients do SMS. It's just an option for nil returns. Next, please. Is he liable to file GSTR4? For the month of November? No, for the year. A composition scheme guy comes out of the composition scheme in December. Does he have to file GSTR4? Yes, guys, he will have to file GSTR4. Even if you get out of the scheme, the GSTR4 will still be applicable. Next. Guys, this I have not discussed, but you can't file February's return unless you file January's return. So you cannot do very smartly. The months in which there is liability, you don't file your return, but the months there is credit, you file your return. That is not allowed. So Zarina wants to file month of June. She has not filed, but she wants to file GSTRB for the month of July. Is that possible? No, that is not possible. Next, 7th. X has not made any outward supply, but he has some input services. Can he use SMS facility? No, SMS is only for nil. His return is not nil. Next. Can a CA represent himself as a GST practitioner without registering? No, he cannot. He has to register, only then he can. Next is a very simple question, guys. Please answer the 9th question. Guys, do we need scanned copies of the invoices to be uploaded on GSTR1? No, they don't have so much of PDF capacity. And last question, guys, is here. X Limited is winding up its business in Rajasthan. The tax consultant of X has suggested that X will have to either file annual return or final return. Guys, is that the case? You file one of them? No, that's not the case. You have to file both the annual return as well as the final return. Alright, so that, guys, are your questions of returns chapter. I will tell you now, guys, what do I plan to do, and I will also tell you what's the agenda for tomorrow's session. Just give me a minute. Guys, it's a Sunday. and it's been a good long day for us. Congratulations, we've done a lot of good chapters. Exemptions, a few exemptions are left, which we will do tomorrow. Whenever we start, we'll first tackle exemptions and we'll get it done. Good job, guys. Once we finish exemptions, guys, there is an ICAI MCQ booklet which is very important, which has about 85 MCQs, and it has some case-based MCQs. I think it has about 17 cases, and I really want to do this well. So I'm going to do that tomorrow after we finish exemption, because every time you do these case-based, you get better and better at exemptions. So I'm going to do this tomorrow. Excellent, guys. Thank you so much for all the appreciation and the claps. So we will finish all of this tomorrow. Guys, if you're attending my lectures, also do give me a follow back on Instagram so I can also follow you back and we can stay connected till your results. I have a lot of students connected to me on social media. It's really nice to see people do well in their exams and in life ahead. So let's stay connected. This is where you will find me even on the gram and everywhere else, guys. Also, you can also reach out to me on the Telegram in case you have any doubts. Perfect. Great, guys. So we will do this 85 MCQs and the case-based MCQs tomorrow after we finish exemption, and that is going to be a very good test. And I can promise you that if ICAI has done so much of hard work with this case-based MCQs, they will definitely put questions from in your exam. And besides that, we will also do RTPs and past paper questions, and so that you know how to best answer questions in the exam. That's about it. Thank you so much. I'm going to see you guys now. If you have any doubts, I'm definitely here. But in case you don't have any doubts, I'm going to see you guys tomorrow at 2:30 p.m. for the next session. Thank you so much and see you guys very soon. Thank you, everyone.